NVIDIA stock is the talk of the town. They have changed their business model again, and now they're focusing on AI, and it has caused the stock to absolutely parabolically rise.
I was told from one of their major customers that they had to beg for thousands of GPUs.
We have reinvented computing for the first time since the IBM System 360.
History is being written. NVIDIA stock is on an absolute tear after smashing the quarter and increasing guidance hugely. It's about to hit the 1 trillion market cap mark.
Look at that. NVIDIA just reported earnings and their stock is up over 25% after the bell.
All right, folks, buckle up because we're about to take a joyride on the GPU Express. And who do we have as our chauffeur? The one, the only, the trillion-dollar maestro of microchips, NVIDIA. That's right, the company recently hit a $1 trillion market cap, a title only 4 other American companies share. With the future practically being built by this incredible picks and shovels powerhouse, NVIDIA's not just in the driver's seat, they own the whole darn freeway. Picture this, your home, controller in hand, geared up for a thrilling session of Call of Duty. But wait, you're battling pixelated opponents, and let's face it, there's nothing exciting about that. Enter NVIDIA's GPUs, transforming your gaming experience from a vintage flipbook to a crisp 4K movie. But NVIDIA's not just a gamer's best friend. Oh no, they're also the lifeblood of edge computing, generative AI, and those gigantic, powerful cloud computers that make your smart devices smart. They've got the market in a headlock, folks. So if you're in the market for some heavy-duty computing power, or you just want your enemies to look spectacular as you obliterate them, NVIDIA's got you covered. Their GPUs sell for anything between the price of a budget vacation to a small yacht. But hey, what's a couple $1,000 when you're literally purchasing the future? You know what they say, folks, buy the future, not the company. Well, with NVIDIA, you're getting both. Jim Cramer, never one to shy away from pounding the table on the latest Wall Street darling, thinks NVIDIA could even reach a $10 trillion valuation one day. But seriously, these tech titans started the company while eating some flapjacks at Denny's, building it out of a condo in California with a dream to make computing so speedy it'll make everyone else green with envy. Let's dive in.
I was 30 years old and I had never taken a single business class. Went to a law firm called Cooley Godward. He says, we need some money from you so that we could price the shares and also to incorporate the company. So he says, how much money do you have in your pocket? I said, $200. So he says, okay, give me $200. I gave him $200. For $200, I bought 15%, I think it was 20% of NVIDIA.
While popularizing graphics processing units, also known as GPUs, NVIDIA has shifted the PC paradigm on its axis. Think of GPUs as the secret sauce that breathes life into video games, cryptocurrency mining, professional applications, and even a sprinkle in vehicles and robotics. The company has tailored their offerings so cleverly that Microsoft, Adobe, and IBM have all rushed to RSVP to the NVIDIA party. NVIDIA may not have created the first GPU, which first entered the computing scene in the 1970s, believe it or not, but they are credited with creating the first consumer-level card, which came with the introduction of the GeForce 256 in 1999, the first product in a long line of successful GPUs. Shortly after, they were selected as the exclusive provider of GPUs for Microsoft's Xbox. Fast forward to 2020, most businesses got a sucker punch from COVID-19, but for NVIDIA, it was like they caught the golden snitch. People were suddenly working from home, and when they weren't working and were still stuck at home, they gamed, and they needed hardware, and PCs became as essential as, well, toilet paper. GPU demand exploded. In 2020, NVIDIA's revenue was just under $11 billion. 1 year later, the revenue skyrocketed to nearly $27 billion, while more than doubling their net income. Today, current estimates by the Bank of America suggest that the company has as much as 83% of the market share when it comes to GPUs. And that market share is being translated to dollars, with the company recently reporting $7 billion in quarterly revenue for Q1. What's more is that they're calling for $11 billion in top-line revenue for Q2, which is more than the company posted in all of 2020. Now, let's dive into the external factors, those forces outside of NVIDIA's control, including some of the recent hiccups, starting with crypto. NVIDIA's journey with cryptocurrency is a little like a friends with benefits situation. It was fun while it lasted, but the end was always inevitable. NVIDIA's GPUs, like the popular kid at a party, became an attractive choice for crypto miners because of their performance and power efficiency. The relationship got so hot during the 2017 crypto boom that it grabbed the attention of the SEC, resulting in a $5.5 million fine for NVIDIA due to insufficient disclosures, which for a $1 trillion company today is like a local hot dog vendor dropping a dog on the ground and having to throw it out. But the crypto boom eventually lost its luster, particularly in 2022 when Ethereum mining transitioned from proof of work, which requires intensive computational power, to proof of stake. This put NVIDIA's CMPs specially designed for Ether mining out in the cold. The result, a 52% year-on-year drop in related sales. Of course, some crypto still currently requires GPUs to mine, but they aren't the second most popular crypto in circulation like Ethereum. Let's just say in the crypto dating game, NVIDIA got swiped left. But crypto wasn't the only blow to NVIDIA in recent years. Eventually, when the pandemic ended, the need for people to sit at home and play video games all day wasn't quite as hot. But it didn't matter because they had a much hotter date waiting for them around the corner.
What it can do is completely different, something really quite incredible. And this is absolutely the case with generative AI. You program it with human language. It could be precise, it could be imprecise, and somehow through conversation, this computer figures out what it is that you want, and it does it for you. It can even write software for you.
NVIDIA and AI are a match made in silicon heaven. You see, GPUs are the bedrock of artificial intelligence, and NVIDIA just so happens to make some of the best ones in the business. Let's take a trip back in time to 2006, when the world was still young and Justin Timberlake was still bringing sexy back. NVIDIA, on the other hand, was bringing CUDA to the world, a parallel computing platform and programming model. It let developers tap into the future potential of GPUs. In layman's terms, it's like teaching a racehorse to moonwalk. Impressive and incredibly useful for some very specific scenarios.
We saw early on, about a decade or so ago, that this way of doing software could change everything. And we changed the company from the bottom all the way to the top and sideways. Every chip that we made was focused on artificial intelligence.
With CUDA, NVIDIA turned their GPUs into high-speed computing powerhouses. With the right software, users could now run computations on gigabytes of data with just a few simple queries. It took a while for people to catch on, around 10 years. But when they did, it was like the discovery of sliced bread all over again.
10 years, Wall Street asked NVIDIA, why are you making this investment? No one's using it. And they valued it at $0 in our market cap. And it wasn't until around 2016 that after, 10 years after CUDA came out, that all of a sudden people understood this is a dramatically different way of writing computer programs, and it has transformational speedups that then yield breakthrough results in artificial intelligence.
Fast forward to the present, and NVIDIA's GPUs are not just vital for training and operating AI models. They are synonymous with them. AI model GPUs are needed not only for the initial training of the AI model, but every time someone uses ChatGPT. So the number of GPUs required will scale with the number of users. Sounds like a limit to AI growth, don't it? According to the consulting firm TrendForce, OpenAI probably needed the equivalent of 20,000 DGZ A100 NVIDIA GPUs to train the ChatGPT model. Those GPUs cost around $200,000 each, so that costs a total of $4 billion. They further estimate that OpenAI needs the equivalent of about 30,000 of these systems to support the product's 100 million active users. This will cost another $6 billion. Instead, OpenAI did not buy the 20,000 NVIDIA GPUs. They chose to partner with Microsoft to leverage the tech giant's existing cloud computing infrastructure, which already had the computing power. As the AI industry grows, Microsoft, Google, Amazon, IBM, and many other companies will have to buy more GPUs. Now, let's talk valuation. NVIDIA stock is now trading at a premium of nearly twice its 200-day moving average, which is quite the rally. Despite NVIDIA's promises of strong Q2 results and future growth, their Q1 revenue dipped while gross margins barely flickered upwards. And let's remember, the company approached a $1 trillion valuation primarily due to optimistic market sentiment. It's almost like the market expects GPUs to start laying golden eggs. One popular chart working its way around on social media is a case study on the mobile industry by Morgan Stanley. What we learned from smartphones was that the first segment of the boom went to chip companies. The next segment went to infrastructure and devices, and then the third one went to the software companies, which, if AI plays out anything like mobile, tells us there's probably a few more years ahead of comfortable returns for investors in NVIDIA. The major driver of NVIDIA's growth has been the data center industry, which slowed in 2022. The hiccup is noteworthy, but there could be something to be said for a lack of GPUs in the market.
Talking with the CEO and CFO of a major data center REIT, and they shared with me that they're seeing more demand in the last couple of months than they've seen in the prior 10 years.
There's also the minor detail of NVIDIA being heavily reliant on TSMC to manufacture its chips. With looming geopolitical tensions around Taiwan, it's like having a ticking time bomb in your own supply chain. So, as with any company trading around 84 times forward earnings and 35 times forward sales, there's risk. Many investors are drawn to NVIDIA because they love the picks and shovels model. If we want to turn to recent history, we can consider comparables from the dot-com bubble. The internet infrastructure company Cisco was the NVIDIA of those days. It created routers and other hardware necessary for connecting enterprises to the internet during the dot-com bubble of the late 90s and early 2000s. Cisco saw its revenue explode as every company wanted to get connected to the World Wide Web. Let's just say it's now 20 years later and the company still hasn't gotten back to those all-time highs. Of course, the world of investing can sometimes resemble a high-stakes game of poker, where the stakes are billions and your bluff could mean the difference between a pot of gold or a handful of dust. This analogy seems apt for Cathie Wood, the pioneering fund manager of ARK Innovation ETF, who played her hand a little too early on NVIDIA, causing quite the stir on FinTwit. Back in January, our visionary fund manager decided that NVIDIA was a bit too pricey. She concluded that the $234 price tag was like buying a designer handbag at full price when you could just wait for the seasonal sale. In her own words, NVIDIA was the check-the-box AI company, valued very high at about 50 times projected earnings. And so, as the dealer called, Wood folded, leaving the table as NVIDIA's stock began its astonishing rally.
We are on AI, but we're doing it in a little bit of a differentiated way. NVIDIA has become a check-the-box stock. That's why the valuation is where it is.
Wood justified her sell-off as part of her strategy to consolidate towards high-conviction names and showed her wariness about the volatile nature of the chip sector. Well, volatility in this case had a different plan. Since Wood's exit, NVIDIA's market cap swelled by $560 billion, leaving ARK investors at the dock as the NVIDIA yacht sailed into the sunset with a 160% surge.
We're looking at NVIDIA at 25 times sales, which is where it is. And Tesla, which is probably the biggest AI story out there, is at 6 times earnings. UiPath yesterday, not earnings, 6 times sales.
Got it. So we're now comparing a company that has a monopoly on chips to a car manufacturer. And the metric we're going to use is price to sales multiples. Okay, Cathie.
The one that got away, huh?
So let's wrap it up. In the tempestuous seas of emerging industries, the spectacle unfolds much like a high-stakes game of who's who. Everyone's got their binoculars trained, hunting for the imminent champion. Between Jim Cramer's exclamation of a $10 trillion value and stock promoters bellowing that they've unearthed the next NVIDIA, it's a veritable circus. Speaking of NVIDIA, it's sitting pretty with an 83% market share of an indispensable component in an arena where tech titans like Apple, Google, and Amazon don't want to be caught snoozing. Valuation-wise, NVIDIA is just like those companies. We all once gawked at the FANGs while looking at their soaring stock prices and colossal market caps, while thinking, is there any upside left? But let's remember, today Warren Buffett isn't exactly whining about owning Apple, even at nearly a $3 trillion valuation.
Apple is different than the other businesses we own. It just happens to be a better business than any we own. Maybe they pay $1,500 or whatever it may be for a phone. And these same people pay $35,000 for having a second car. And if they had to give up a second car or give up their iPhone, they'd give up their second car.
Meanwhile, NVIDIA nonchalantly ascends the ranks, now the 6th largest company in the world by market cap. A testament to the allure of AI, a technology set to revolutionize our world in inconceivable ways. As for the field when it comes to AI companies, it's not exactly crowded. Only a select group of high-quality players beckon to investors. But here's a slice of advice for the skeptics. At some point, investors will start to think that NVIDIA is too expensive, and they're going to have to play the space, which is going to make them turn to gaze towards the lesser-known underdog AI stocks. History suggests that each cycle has its dark horses that catch the market's fancy, often driven by those who balk at the hefty valuations of the leading companies. ChatGPT is here, and it's about to disrupt all sorts of things around us. For investors willing to dissect the sector, uncover hidden gems, and put in the hard graft of due diligence, it's not a question of if, but how high the rewards can be. So folks, buckle up, adjust your binoculars, and brace for the thrills of this investment roller coaster, because the AI bubble is just getting started. Today's video is brought to you by Versus, a cognitive computing company specializing in next-generation AI. Modeled after natural systems and the design principles of the human brain and human experience, Versus' flagship offering, Gia, is an intelligent assistant for everyone powered by Cosmos, a network operating system enabling distributed intelligence. For more information, go to versus.ai.